First of all, I don't think we're near to the start of the boom. I think we're in it.
Well, there we go.
People pay attention to equities markets, resource equities markets as being down for 6 months, having been up for 36 months. When people say, Rick, when is gold going to move? What I say is, well, over 5 years, it's moved from 1,050 to 1,800. In other words, when does the move start? 5 years ago. We are in a cyclical decline in a secular bull market. It is not unlikely it could go further, but sometimes things get cheap enough. When you talk about a commodities bull market, Adam, I want to reiterate a discussion I had on your show where I suggest that we're in two distinct commodity bull markets. The first is a precious metals market. We are in hiatus, hell, we're in decline with regards to the precious metal shares. But the truth is, if you believe in the underlying thesis around gold, which I absolutely believe in, the gold stocks aren't reasonably priced, but rather for the first time in my life, in my career, they're cheap. When will the market take effect? I don't know. I watched the same circumstance exactly happen in 1975. And again, as Brian suggests, in 2002. The stage was set, but the momentum investors left the trade. And so bargains were had by those who were astute enough to keep up to it. The other market, of course, is the industrial materials market. And we have seen what can happen when spot supply shortages hit that market. The oil quote going from what, 20, 30 bucks. I'm not talking about the sub-zero market that was brief, right, from 20 or 30 bucks to 135 bucks. The seaborne liquefied natural gas quote going from $6 a million BTU to now 36 million bucks, 36 bucks a million BTU in Europe. Certainly, we've seen the impact of supply shortages. And the market, or at least investors, particularly those on this call, need to understand that supply shortages are absolutely, positively inevitable as a consequence of systemic underinvestment in sustaining capital. Could they be delayed for 2 years or 3 years by recession? Yes, absolutely. Could commodity prices do well despite recession? Look back to the 1970s. The answer to that is inescapably yes. Is the bottom in? I don't know. Frankly, I personally don't care. When stuff is cheap enough, I deploy, and I'm doing that now.
So just to be clear, you are deploying capital right now?
I find myself embarrassingly, as a consequence of selling a couple pieces of real estate that I held for a very long time, having my portfolio well in excess of 40% cash and bullion. Ideally, I'd like to have 10% liquidity in my portfolio. So I'm trying to deploy with increasing eagerness. Don't get me wrong. I like cash. It helps me sleep nights and stay calm. But having in excess of 40% of your portfolio in cash when you think that a sector you know well is cheap, and when your yield on that cash absolutely positively without fail guarantees you a loss, there is some urgency to deploy, and I'm deploying now.
Totally makes sense. Just want to tug on the thread here on supply shortages that you mentioned before. So yes, when you've been on my program, you have talked for many years about the fact that a big part of the resources investing thesis right now is really positioning for the chickens to come home to roost from decisions that were made a decade ago, longer than that, in terms of just starving capex of a lot of this sector, right? And what's interesting is the headlines right now, the focus are on the supply chain disruptions that were either caused by the pandemic or then by the Russian boycotts. I presume that that's just kind of noise relative to the larger shortfalls for the capex underinvestment. I see you nodding as I'm saying this, but is that actually true? Is the big mega trend here really the inability to have invested in these industries?
Yeah, absolutely. I mean, the Russian invasion of Ukraine and the subsequent response shows us how tenuous the supply chain is. But there was no flex in the system. And it's important to note, if everybody's looking for Russia to kiss it all and make it better, if peace resumes, that the Russians have been among the worst offenders in terms of deferring sustaining capital investments.
Yeah.
Which is to say that some of the hiatus in Russian shipments might have to do with Russia's inability to ship as much as they suggest that they might otherwise be able to do. But it's important to note that underinvestment in productive capacity and resources goes back decades, not quarters. It's important to know that all of the legislative protections put in place as an example for the economy and for the environment, are also protections against prosperity in the context of the fact that they delay resource development. There have been other sectors of the economy that have either been more attractive or have been viewed as more attractive. And the consequence of that is that there has been a crowding out of natural resources in the economy for many, many, many years. But that's been exacerbated of late around ESG concerns around the environmental part of natural resources. One example would be the Resolution copper deposit in Arizona. 1.5% grade, as opposed to worldwide average mine grade of 0.5%, which is to say triple the worldwide grade. No conventional concept of political risk. It's in the United States and it's in a copper mining town. Absolutely world-class scale, well over 1 billion tons, was discovered 25 or 26 years ago. It has been in permitting for 21 years with no end in sight. The people that own would love to make the capital commitment. By the way, it's going to be a $7 or $8 billion capital commitment. It will take 5 or 6 years to build. But when I say decades of underinvestment in resources, I literally mean decades. If you look at the copper business, an example, everybody's looking to the electrification of the world, electric automobiles, all this kind of stuff. And yet productive capacity around copper, hell, Adam, it's older than me. We need to replace major amounts of copper production. And there's one big new mine, two big new mines that have been brought on stream in the last 6 years. We need to be bringing on one a year. And we aren't doing anything like that. Similarly, in oil and gas, during the COVID period, it was estimated that the global energy industry, when the oil price was way low, was deferring new project and sustaining capital investments of about $3.5 billion a day, $1 trillion a year.
Wow.
Now, with oil and gas prices higher, and with the chattering classes suggesting that, oh, well, maybe we could use a little more oil, the oil and gas industry is only deferring new project and sustaining capital investments of $1 billion a day. $365 billion in new project and sustaining capital investment is being deferred or delayed by the oil and gas business. This in a business where every day you pump a well, your business gets smaller. It's important to maintain, in terms of maintaining production, that you develop new fields, that you develop new infrastructure capabilities, that you recomplete wells, that you tune up, if that's the right phrase, water floods and gas floods. And worldwide, to the tune of $1 billion a day, we are underinvesting in productive capacity in the oil and gas business. There are no free lunches. That number has come home to bite, and it's going to continue to bite until it's addressed.
Which way are we going to change here? Are we just going to have such great supply shortages that we finally, that pain causes us to say, look, all right, we're going to have to get rid of all the red tape and start actually being more pragmatic here? Or is there any hope that we could actually do something smarter sooner?
Experience tells me no hope politically. I think it was Churchill that said the United States has always done the right thing after they exhaust all the other opportunities.
Every single other possible option, exactly.
Yeah, and I mean, I think that people are beginning to wake up to the impact of higher energy prices. I think too, people, at least savers, are beginning to wake up to the fact that banks are paying them 60 basis points in a currency that's deteriorating by 900 basis points. It's sort of a lousy spread.
Yep.
And my suspicion is if enough people start worrying about their own lives, their own portfolios, that the aggregate of those actions will make some difference. But I expect that you'll see societal change when enough people get hurt badly enough that they threaten their elected politicians with an immediate vacation. That seems to be what changes things. I don't mean to sound cynical, but I've been watching the political process as it relates to investment for 49 years. And the consequence of that makes me pretty cynical.
All right. So yeah, so looks like the pain is probably going to have to be dialed up before the changes we'd like to see start to happen. If you enjoyed this video clip, click here to watch another one you should like.